Hello everyone. The concept of contribution is a simple but an important one in cost accounting, which helps management accountants to work out critical pieces of information like break-even point, target profits, etc. In this video, I will explain this concept briefly, so let's go for it. The whole word for contribution is contribution towards fixed cost and profit. You can write it down. Contribution towards fixed cost and profit. The concept is that every time you sell a product, let's say we have a bucket which is fixed costs, and we have another bucket which is profit. So the concept is that every time you sell a product, let's take an example. We sell a product for SP is selling price 10, and the cost, and this time is variable cost. I will explain why. £5. So there are two types of cost, right? One is variable cost and the other one is fixed cost. So first we take away variable cost and we have contribution. Yeah, it's very simple. Sales less variable cost is contribution per unit. In this case is per unit. Every time we sell it, it contributes towards meeting our fixed costs. Let's say our fixed costs are £10,000, and once this is full, then it contributes towards our profit. So that is the simple concept of contribution towards fixed cost and profit. How we calculate that, you can see that again, sales revenue less variable cost. It could be done per unit, and per unit is very helpful in decision making, and we will see a few exercises how it helps us. And it could be done as a total as well, which is less helpful in decision making, but as a piece of information, obviously it does have its uses. So sales revenue less variable cost equals contribution, and then we have fixed cost, and then equals our profit when we done our. Because fixed costs, we did discuss that when we are making a decision, fixed costs are generally cannot be changed in the short term, hence they are not relevant for decision making. So the marginal costing actually ignores fixed costs in this case, and you can see that why it does that. So if we take this simple example, how many units do we need to sell to meet our fixed cost? We simply divide 10,000 by 5, and we know that we need to sell 2,000 units to fill this fully. Now anything we sell after 2,000 units, it's going to contribute towards our profit. Very, very important piece of information. The point where we have met all of our fixed cost, that means variable cost we have already taken away, and then fixed costs are now met. We are at a point where we have covered all of our costs. So when our revenues equals total cost, and that means variable cost plus fixed cost, this point is called break-even point. We also call it, write it down mostly as BEP. Every manager needs this information. What is our activity level where we are not making any profit or loss? That's our starting point. We need to know this in our unit terms, and we need to know this in our total terms. And so we need to know how much we need to sell in a month to meet our costs. And we also need to know how many units of products or services we need to sell to achieve that level. So that's our baseline that we need to meet our total cost. We need to make a break-even point. After that, whatever you sell, you're making a profit. So let's say a profit center manager, we looked at in the first class, a profit center manager would get a target of achieving a certain amount of profit. So if your boss tells you that this year your target is to achieve a profit of 100,000, how are you going to achieve that? Just sit and wait for the best, finger crossed? No, we will actually work out what do we need to do, and that's our planning. What do we need to do to achieve that much profit? Because my bonus is based on that. Very, very important thing, bonuses in the life of a manager. So we need to work that out. So let's say this manager gets a target of 5,000. What do they need to do? They need to divide it by 5, which is contribution per unit, and we know that to achieve a profit of 5,000, we need to sell 2,000 plus 1,000, 3,000 units. If we sell 3,000 units, we are selling one for £10. We need to make £30,000 in sales. That is the second bit of planning. In high-low method, you have seen that if you're planning a certain level of production next month, how we can actually figure out what is the total cost of that, of producing 10,000 units or 15,000 units or 1 million units, whatever. If you have some data from the past, you can always work out how much it's going to cost us to produce that. And this is another very important piece of information, that how we are going to achieve a certain level of profit, how we are going to achieve break-even. That's the starting point. I hope you like this video. So please give it a thumb up and share it to your friends, and subscribe to my channel where I will be releasing more videos like this. Thank you for watching this video. Cheers.